Good afternoon. This is Ken Long from Tortoise Capital Management with a look at the market health check on August 15th, 2009, getting ready for the markets open on Monday, August 17th. So we can see that the market has moved up in a powerful way, tested 102 last week, and then this week there was some pullback, a couple runs at 102, couldn't quite break through, so it's basically been trading in this sideways range. It's highlighted in the blue box with the yellow highlights. You can see the 20-day moving average has been pulling away from the 50 and is coming up to provide some near-term support at 99. The 50 is providing support at 95. The 200-day moving average way down here at 87. You can see the slope of that in the form of the shaded area actually starting to roll over and turn up, and that's a favorable sign. On the top chart here, we're in bull quiet mode and have been for a month. The ATR, measure of volatility, has flattened out and gone sideways, but it's still at the low end of the last 3 months, so extraordinarily quiet. The ADX line is the black line. That's a measure of trendiness. It's up above 35 and has been for a week. That's a very powerful bull trend. But you can see the plus DI line, green, is crossed back underneath it and is starting actually to decline. The bearish minus DI line, the minus directional indicator, has hooked up slightly. The bulls are still in charge. And basically, when I look at all this, this is a market that is pausing. It has resisted the urge to sell off hard. You can see that long tail from Friday. It opened, sold off hard, and then fought its way back up to 101. So there's still plenty of willingness to buy on dips. On the Williams percent R10, or the short-term market indicator, you can see the long period of time between these two red circles when it was in overbought conditions, which corresponds to the powerful bull. It came back into normal. There was a buy on dip in here. You see it briefly touched into overbought once more, and now it's back to about the 50-yard line. So we're right in the middle between overbought and oversold. No directional bias other than to say, in bull markets, you want to buy dips, and so this is looking like an opportunity to buy somewhere around in here. The MACD histogram has declined. You can see, if you believe in the 4 seasons of MACD histogram, this was the autumn, and it's come back to the 0 line. And so, again, that's just an indication of a market that has pulled back and is traveling sideways here for a while. So, longer term, the indicators are up. There's been no evidence of panic selling. There are clearly defined support levels at 99 and 95 that would tell us at which point the bears would be back in charge. But until then, we're looking at weakness as opportunities to buy on dips. So we're interested in the long, strong ETFs and the leaders in the large caps in our screens. So, thanks for your attention. That's the market health check for August 15th.